Welcome back to the Value Investors Club. I'm your host, Timo Wunderlich. Let's get right into it with VIC Readings, the format where we look at the best of the best value investment recommendations by the best of the best value investors out there. Today we have VERRA Mobility Corp. Ticker is VRRM. Price at the point of filing is $14. Description. Oh, let me first say this is not a recommendation, not advice. Please do your own diligence before investing into anything, and let's get right into it. Description. Thesis overview. VERRA Mobility is a buy at $14 per share or 10x 2022 EBITDA because the company is the dominant market share leader in two segments: electronic tolling for rental cars and video enforcement for traffic violation that have secular tailwinds. Additionally, the company's strong margins and low capital requirements allow for a strong free cash flow conversion that VERRA has used to buy back its own stock and make selective acquisitions. Returns. A 12x, our estimate for 2024 EBITDA, VERRA would trade at $24 per share or 70% higher than today's price. This also includes free cash flow generated along the way. Business overview. VERRA's current business is comprised of the following segments. To get more background on the company, please refer to the two prior write-ups on VERRA 2020 and 2018. The biggest change to the composure of the business is that VERRA recently purchased a company called T2 Systems, which provides parking solutions to colleges and cities. Segment Commercial Services Overview. Market leader in toll and violation management for commercial fees, 42% of revenue. LT revenue growth, HSD. Core products and solutions, toll services, violation processing, and title and registration. Segment Government Solutions. The overview. Industry leader in automated traffic enforcement for cities and school districts. Percentage of revenue 46. LT revenue growth, MSD. Core products and solutions: speed safety, transit bus lane enforce, school bus stop arm safety, red light safety. Segment Parking Solutions. Overview. Technology provider of end-to-end parking management solutions in the North America. Percentage of revenue 12%. LT revenue growth, HSD, and core products and solutions, software, services, and hardware. Investment highlights. Market leadership leads to great economics and a strong competitive moat. VERRA is the number one player in its two largest markets: A, rental car cashless tolling, and B, automated photo enforcement. There aren't really any other true rivals with any real scale that can compete with them. This has created a business that has 45% EBITDA margins and ROIC of about 50%. All three segments have secular tailwinds and large growth opportunities. Commercial services, secular. More and more toll roads are converted into cashless tolling. In 2019, 50% of toll roads used cashless tolling. By 2021, the number had grown to 64%. Per VERRA's 2021 Investor Day presentation, we expect this trend to continue. So, when you combine that with a return of business travel, VERRA's commercial services business can grow with a high single digits over the next 5 years. Large growth. VERRA has been working for years to recreate its business model for cashless tolling for rental car fleets in the United States and Europe. They are actively involved in pilots in a couple of pilots in a couple of European countries. Government services. Secular. Traffic stops are the leading cause of police slash civilian conflicts in the country. There's a strong desire by municipalities, I don't know that word, to add contactless enforcement programs because A, they reduce the potential for conflict, and B, they capture more violations because they are running constantly. VERRA offers a broad suite of contactless video enforcement solutions, from school zone speeding to bus arm cameras. Large growth. There are rumors that another or multiple large US cities will put into place an NYC type school zone speed enforcement program. New York is obviously the largest city in the country, but it currently makes up 20% of VRRM's revenue. Winning a Los Angeles, Houston, or Chicago would be a meaningful top line and profit contribution. Parking. Secular slash opportunistic. VERRA recently bought T2 Systems to add parking services as a third leg to their stool. T2 has a leading market share, plus 40%, in the tier one above 15K students college sector for parking solutions, about 15% market share in the municipal sector. VERRA has sized the municipal total available market at 1.2 billion. VERRA has 200 plus relationships with municipalities. Like I said, I don't know the word that T2 previously had no relationship with. We believe that there is a nice opportunity for VERRA to cross sell its new parking solution into their existing video enforcement customers. Large growth. VERRA got into this business to fill out its urban mobility platform. In their view, there will be a movement to monetize the curb in the near future. That means managing access to who to can use the curb at any point in time, automating enforcement of those rules, and aggregating/analyzing the future. That means managing access to who to can use the curb at any point in time, automating enforcement of those rules, and aggregating/analyzing the data for the municipality partners to increase the yield from that highly sought after real estate. VERRA has said that this is a potential $4 billion TAM. Strong economic model leads to above 50% free cash flow conversion, which leads to a lot of optionality when it comes to capital allocation and to grow free cash flow per share significantly. At their 2022 Investor Day, VERRA put out some long-term targets. As part of those targets, they announced that they would generate 1.2 billion of cash over the next 4 years, or $8 per share. They are also expecting to grow EBITDA by 40% over that time. So that if they relevered the business to 3.5x EBITDA during that period, it would create another 500 million of capital available to deploy $3.25 per share. This gives the company a lot of opportunity to do either M&A or share buybacks, of which they have done both in the past. Either way, the result is that VERRA expects to generate between $2.05 to $2.10 of free cash flow per share by 2026, which represents a 15% CAGR from 2021 actual free cash flow per share. I don't expect a business of this quality to be trading at 7x free cash flow. The Nietzsche management has said that they are going to focus their capital allocation on deleveraging the balance sheet, given that 2/3 of the current debt is variable rate, which will be a headwind to 2023 EPS. Key risks/headwinds. Customer concentration risk. New York City makes up 20% of VRRM's revenue. Hertz, Avis, and Enterprise make up 37% of VRRM's revenue. Key mitigating factor, all of 4 of these relationships have been going on for years. VERRA's is deeply embedded in not only the customer technology stack, but the partner, toll agencies, DMVs, etc. Technology stack. In late 2022, VERRA renewed Hertz for 5 years. Avis is under contract through 2025, and Enterprise is up for renewal in the spring of 2023. Interoperability among toll roads would reduce the value proposition VRRM provides to its customers. Product revenue will likely drop in 2023. The final installation of the NYC school speed zone cameras was completed in Q3 2022. This will cause a year-over-year decline in overall product revenue in 2023. It looks like the sell side is modeling this correctly, but what will happen is that VERRA's organic growth will slow this coming year versus a more normalized year as they lap the final NYC camera installations. Catalyst. Continued services growth in 2023 will lead investors to realize the strong secular trends that VERRA has at its back, and we can finally start lapping the one-time revenue and profits from the NYC school speed zone rollout. Thank you very much for tuning in, and see you